Delta Sigma Theta Sorority Incorporated is a private, not-for-profit organization whose purpose is to provide assistance and support in local communities throughout the world. The sorority currently has 1,000 collegiate and alumni chapters located in various countries around the world, including the United States. The Suburban Houston Fort Bend Alumni Chapter was chartered on May 22, 1976 as the 553rd chapter of Delta Sigma Theta Sorority Incorporated in order to establish a new service area which covered Missouri City and Fort Bend County, Texas. Since its inception, we have continued to promote and execute the national 5-point programmatic thrust of the sorority. These thrusts aim to maximize our impact on the community. National economic trends such as unstable employment, the threat to Social Security as we know it, and the widening gap between wealth and poverty are the basis for the development of Financial Fortitude, which is the current economic development program initiative of the sorority. Through this initiative, we are excited to spread financial education and to share the following Money Smart for Older Adults presentation with you.
Welcome to Smart Money for Older Adults. By taking this module, you'll learn important points to consider in planning for a more secure financial future, including how to guard against identity theft and other forms of financial exploitation, as well as how to prepare financially for unexpected life events and disasters. Before we get started, I would like to share a little bit about myself. My name is Brenda Lemmy. I am a member of Suburban Houston Fort Bend Alumnae chapter of Delta Sigma Theta Incorporated. I currently serve as the advisor for the Economic Development Committee. I am a native of Missouri, a graduate of Southern Illinois University, Edwardsville, Illinois. I have a master's degree in counselor education, and I have retired after working over 40 years in the chemical, financial, and insurance industries. Let's talk about our objectives. Our objectives, after completing these modules, you should be able to recognize and reduce the risk of elder financial exploitation, guard against identity theft, plan for unexpected loss of the ability to manage your finances, prepare financially for disasters, and find other helpful resources for managing your money and reporting financial exploitation. So let's get started. What is elder financial exploitation and who is at risk? Let's start by establishing an understanding of elder financial exploitation. Financial exploitation is a type of elder abuse. Elder abuse can take many forms, alone or in combination, including physical, psychological, emotional, or sexual abuse, neglect, abandonment, and self-neglect. So what is elder financial exploitation? The Older Americans Act defines elder financial exploitation quite broadly as the fraudulent or otherwise illegal, unauthorized, or improper act or process of an individual, including a caregiver or fiduciary, that uses the resources of an older individual for money or personal benefit, profit, or gain, or that results in depriving an older individual of rightful access to or use of benefits, resources, belongings, or assets. So who is at risk for elder financial exploitation? Anyone can be the victim of financial exploitation. Financial exploitation crosses all social, educational, and economic boundaries. So why are older adults at risk of financial exploitation? The following circumstances or conditions, especially in combination, can make an older adult more vulnerable to financial exploitation. Some older adults may have regular income and accumulated assets, be trusting and polite, be lonely and socially isolated, be vulnerable to grief from a loss of a spouse, family member, friend, or pet. They could be reluctant to report exploitation by a family member, caregiver, or someone they depend on. They are possibly dependent on support from a family member or caregiver to remain independent. They may be receiving care from a person with substantial abuse problems, gambling, or financial problems, or mental health problems. It could be fear of retaliation by the exploiter. They may be unfamiliar with managing financial matters. There might not have been a plan for the potential loss of decision-making capabilities. They may be cognitively impaired with diminished ability to make financial decisions or to debt fraud or scam, or they may be dependent on a family member, caregiver, or another person who may pressure them for money or control of their finances. So, what are some examples of financial exploitation? Exploitation by an agent under a power of attorney or person in another type of fiduciary relationship could be theft of money or property, often by a family member, caregiver, or in-home helper. Could be investment fraud scams, including deceptive free lunch seminars, selling unnecessary or fraudulent financial services or products, lottery and sweepstakes scams, the grandparent imposter scams, tax and debt collection scams, charity scams, scams by telemarketers, mail offers, or door-to-door salespeople, computer internet scams could also occur, identity theft, reverse mortgage fraud, contractor fraud, and home improvement scams. So who are the abusers? People you know. They could be family members and caregivers, friends, neighbors, or acquaintances, agents under a power of attorney, or others with legal authority to manage your money or your property. They could be financial advisors, could be strangers, telephone and mail scammers, internet scammers, home repair contractors, Medicare scam operators, and other persons known or unknown to the older adult. So why don't older adults report financial exploitation? There can be several reasons for this, and we will list a few. Shame and embarrassment. Many people are ashamed to admit they have been financially exploited. Loyalty. Other adults may be reluctant to report a family member, caregiver, or other person who may treat them well in other ways. Fear of retaliation. Older adults might fear not being believed or losing their independence by being declared incompetent or moving into a nursing home. Dependence on the abuser. Victims may be dependent on the abuser for care or assistance. Denial. Some victims are unwilling or unable to acknowledge that financial exploitation is happening to them. Self-blame. Abuse can erode an older person's self-esteem, and some victims may believe they deserve or have caused the abuse. Lack of awareness. Some victims are unaware that they are being exploited or don't know whom they can report financial exploitation. So, what should you do if someone or someone you know becomes a victim of financial exploitation or another form of elder abuse? In most cases, suspected elder abuse, including financial exploitation, you should contact Adult Protective Services, generally a part of your county or state Department of Social Services. You can find information about reaching your local Adult Protective Services office at the Elder Care Locator at this email address that is listed, or you may call 1-800-677-1116. If the older person is in danger or you believe a crime has been committed, call 911 for an immediate response from the police. So, who can help? For cases of identity theft, such as bank or credit card union or credit union, a financial institution, report the problem to the financial institution immediately. If the loss involves credit products, such as a credit card or loan, contact the creditor immediately. Remember, you are not responsible for credit card charges or payments out of your bank account if you did not authorize them, is the key. For more information, you may go to this website listed on this page, consumerfinance.gov/askcfpb for more information. The next item that we are going to be talking about is identity theft. Identity theft occurs when thieves steal your personal information. For example, your social security number, birth date, credit card numbers, personal identification numbers, or PINs, and passwords. With sufficient information, another person can use your identity to commit fraud or other crimes. So, how should we avoid identity theft? Protect your social security number, credit card and debit card numbers, PINs, passwords, and other personal information. Never provide this information in response to an unwanted telephone call, fax, letter, or email, no matter how friendly or official the circumstances may appear. Watch out for people who may be trying to look over your shoulder while you use the ATM, seeking to steal your personal identification number, your PIN. In case your wallet is lost or stolen, carry only the identification you really need: checks, credit, or debit cards. Keep the rest, including your social security card, in a safe place, including including any copies. Do not print your social security number, your telephone number, or driver's license number on your checks. You do not have to give merchants your social security number. If requested, ask the merchant to use another form of identification that does not include your social security number, for example, a passport or a driver's license. Protecting your incoming and outgoing mail is important. For incoming mail, try to use a locked mailbox or other secure location, for example, a post office box. If your mailbox is not locked or in a secure location, try to properly remove mail that has been delivered or remove the mailbox to a safer place. When ordering new checks, ask about having the checks delivered to your bank branch instead of having them mailed to your home, where you can run the risk of a thief finding them outside your front door. For outgoing mail containing a check or personal information, try to deposit it in a United States Postal Service blue collection box. Hand it to a mail carrier or take it to the post office instead of leaving it in your doorway or a home mailbox. A mailbox that holds your outgoing bills is a prime target for thieves who cruise neighborhoods looking for account information. Avoid putting up the mailbox flag to indicate that outgoing mail is waiting. Sign up for direct deposit. Signing up for direct deposit of your paycheck, retirement check, and/or your state or federal benefits, for example, Social Security. Direct deposit prevents someone from stealing a check out of your mailbox and forgoing your signature to access your money. Direct deposit is also beneficial in the event of a disaster. Keep your financial trash clean. Thieves known as dumpster divers search through garbage looking for pieces of paper containing Social Security numbers, bank account information, and other details they can use to commit fraud. What is your best protection against dumpster divers? Before tossing out these items, destroy them, preferably using a cross-cut shredder that turns paper into confetti that cannot be easily reconstructed. Keep a close watch on your bank account statements and credit card bills. Monitor these statements each month and contact your financial institution immediately if there is a discrepancy in your records or if you notice something suspicious, a missing payment, or possibly an unauthorized withdrawal. Contact your institution if a bank statement or credit card bill does not arrive on time. Missing financially related mail could be a sign someone has stolen your mail and/or account information and may have changed your mailing address to run up bills in your name from a phony location. Avoid come-ons for personal information. Never provide bank account or personal information in response to an unsolicited email, telephone call, text message, or when visiting a website that does not explain how personal information will be protected. Legitimate organizations would not ask you for these details because they already have the necessary information or can obtain it in another way. If you believe the correspondence is fraudulent, consider bringing it to the attention of the Federal Trade Commission, the FTC, via its online complaint form. The website is FTC Complaint Assistant, spelled out, .gov. If you do open and respond to a phony email, contact your financial institution immediately. Review your credit card report annually, every 12 months, and report fraudulent activity. Review your credit report carefully for warning signs of actual or potential identity theft. For example, items that include mention of a credit card, loan, or lease you never signed up for, and requests for copies of your credit report from someone you do not recognize could be a sign that a con artist is snooping around for personal information. To obtain a free copy of your credit report, visit annualcreditreport.com. You can submit a complaint about problems with credit reporting to the Consumer Finance Bureau at consumerfinance.gov/complaint or the phone number of 1-855-411-2372. Let's talk about fraud alert for Social Security Administration. The Inspector General for the Social Security Administration is warning the public and Social Security beneficiaries in particular to be aware of fraud scams that target personal information. In most recent scam, identity thefts obtain the personal information of Social Security beneficiaries and use that information to attempt to open a counterfeit My Social Security online account on SSA's website, which you see as ssa.gov. If successful, they then use that account to redirect the beneficiary's direct deposit benefits to an account controlled by the thief. This should not discourage people from using SSA's My Security Social Security feature. That enables the public to set up an online account to view their earnings history and estimated benefits, and allows beneficiaries to obtain a host of services online. Establishing your My Social Security account yourself eliminates the risk of a phony account being opened by an identity thief. This type of crime does, however, serve as a reminder to protect your personal information as you would other things of value. Once thieves have your personal information, they can use it to open credit card accounts, buy homes, claim tax refunds, and commit other types of costly fraud. If you receive information from SSA indicating that you've opened a My Social Security account and you did not open it, you should contact Social Security promptly so that appropriate action may be taken and the matter be referred to the Office of the Inspector General. You can do so by visiting or calling a local Social Security office, or calling the toll-free number at 1-800-772-1213. Individuals who are deaf or hearing impaired can call Social Security's TTY number at 1-800-325-0778. As a note, when a Social Security beneficiary becomes aware that they are victims of identity theft, they can block the electronic access to their information in SSA's records, a service that is available at socialsecurity.gov/block access, or by calling the Social Security phone number provided on this screen. However, be aware when access is blocked, no one, including the beneficiary, is able to see or change the beneficiary's personal information on the internet or through Social Security's automated phone service. What to do with identity theft if you are a victim? If you believe you are a victim of identity theft, the FTC recommends that you immediately take the following actions. Place an initial fraud alert with one of the 3 nationwide credit reporting companies. Order your credit reports and review for incorrect information or new unauthorized account activity. Create an identity theft report. Consider placing an extended fraud alert on security freeze or on your credit report to limit the circumstances under which a credit reporting company may release your credit report. The FTC has many resources available to help you. Call the FTC's Identity Theft Hotline at this number on the screen, 1-877-438-4338, or visit the website at identitytheft.gov. Its online toolkit includes a brochure covering the basics: identity theft, what to know, what to do, a detailed guide for protecting your information with instructions and sample letters to help identify theft victims, taking charge, what to do if your identity is stolen. And it also includes sample letters to help you dispute unauthorized charges or the opening of new accounts in your name. There are sample letters and forms available on the website. Next, we are going to talk about medical identity theft. Medical identity theft is serious business. According to one study, About 1.5 million adults are victims of medical identity theft each year. So what is medical identity theft? Medical identity theft is a form of Medicare fraud. Medical ID theft occurs when someone steals personal information, such as your name and Medicare number, and uses that information to get medical treatment, prescription drugs, surgery, and/or services, and then bills Medicare for it. A thief may use your name or health insurance numbers to see a doctor, get prescription drugs, file phony claims with your insurance provider, or get other care. If the thief's health information is mixed with yours, your treatment, insurance, and payment records and credit report may be affected. If you see signs of medical identity theft, order copies of your records and check for mistakes. You have the right to correct these mistakes. Medical ID theft can cause financial harm, but it is about more than just losing time and money. Sometimes people are denied Medicare coverage for a service or medical equipment because their records falsely show they've already received it, when in fact it went to someone posing as them. It can affect your medical and health insurance records. Every time a thief uses your identity to get care, a record is created with incorrect medical information about you. The information might include a different blood type, an inaccurate history of drug or alcohol abuse, test results that are not yours, a diagnosis of an illness, allergy, or condition that you do not have. Any of these could lead to you receiving the wrong treatment and even being injured or getting sick due to an incorrect treatment. All types of people, including doctors and medical equipment companies, have been caught stealing people's medical identities. There have been even links to the mafia and thieves in other countries. Sadly, about 1/3 of medical identity thieves are family members. So how do you learn if you're a victim? Here are some warning signs that your identity may have been stolen. You get a bill for medical services that you did not receive. You are contacted by a debt collection company for money you do not owe. Your insurance company says you've received your limit on medical benefits. You are denied insurance for a medical condition that you do not have. So how do you avoid medical identity theft? Protect your Medicare and other health insurance cards in the same way you would protect a credit card. Review your Medicare summary notices, your MSN, your explanation of benefits, which is a EOB. Check those statements and medical bills for suspicious charges. If you find incorrect information on your records, insist that it be corrected or removed. Only give personal information to Medicare-approved doctors, other providers and suppliers, your state health insurance assistant program, or Senior Medicare Patrol, your SMP program, or the Social Security Administration. You can call 1-800-MEDICARE if you are not sure if a provider is approved by Medicare. Beware of offers of free medical equipment, services, or goods in exchange for your Medicare number. Shred papers with your medical identity before putting them in the trash. Remove or destroy labels on prescription bottles and packages before you put them in the trash. So how do you respond if you suspect medical identity theft? Ask your healthcare provider for a copy of your current medical file. If anything seems wrong, write to your healthcare plan provider and ask for a correction. Contact your local senior Medicare patrol with the information that is on this page at this website. So how can your senior Medicare patrol help? Your local SMP is ready to provide you with information you need to protect yourself from Medicare errors, fraud, and abuse, detect potential errors, and report your concerns. So they are a resource that will be able to help you. Now, at this point, we'd like to know how you are doing. At the end of this presentation, you will find a slide, which will be a self-checklist to see how you're doing regarding your identity theft. Look at the resource at the end of this presentation and score yourself. Give yourself a 1, 2, or a 3 for all of those items. If you score 0 to 6, you are not taking many actions to minimize your risk of identity theft. Consider what you've learned today and see what steps you can take to protect your identity. If you score 7 to 13, you have developed some good practices to avoid identity theft. However, you have room for improvement. Consider what actions you need to take or apply more regularly to better protect your identity. If you score 14 to 20, you're doing a great job minimizing your risk of identity theft. Continue to apply these actions regularly and determine what additional steps that you can take to protect your identity. Please remember to rate your responses a 1, 2, or 3. Tally your score to see how well you are taking measures to avoid ID theft. Next, planning for the unexpected, preparing for future health problems or disasters. Doing this gives you control and options for your situation. It relieves the stress of decision making from caretakers and family members, saves money and helps you avoid financial disaster or setbacks. It allows time for gathering information, comparing options, and determining which options help achieve what is most important. So how do you prepare for possible future health problems? The majority of people who need long-term care are older adults. However, the need for long-term care can come at any age due to disabling diseases, car accidents, brain injuries, strokes, and other disabling events. Families and individuals who plan ahead before a disability will be in a better position to cope in the event of a disability. Consider taking these steps before you or a family member becomes ill or disabled. Prepare a plan. Start with reviewing your income and expenses. Make sure that trusted family members know where to find personal and financial documents in an emergency. Remember to set up direct deposit for income and benefit checks. Direct deposit delivers your Social Security or your Supplemental Security Income, SSI benefit, or other income resources into your bank, savings and loan, or credit union quickly and safely. Consider automatic payment of important reoccurring bills. Consider a durable power of attorney. This legal document gives one or more people the authority to handle finances and remains in effect if you become incapacitated. Make sure you are properly insured. Speak with a financial planner or an insurance agent you trust. Review your policy regularly because your needs can change. Maintain a healthy lifestyle. Experts also recommend a healthcare power of attorney, also known as a healthcare proxy, advance directive, or by another name depending on the state, designating a family member or other trusted person to make decisions about medical treatment. Healthcare powers of attorney are intended to ensure that someone's wishes regarding medical care are honored. Direct deposit of your Social Security benefit. Let's go into a little bit more detail about direct deposit of your Social Security and Supplemental Security Income benefit payments. Applicants filing for these benefits must now choose either direct deposit or the Direct Express debit card. Currently entitled beneficiaries and recipients who have been receiving payment by check generally had to switch to direct deposit to a checking account or a prepaid card they select, or to the Direct Express debit card. The U.S. Treasury sends an electronic message to your bank, savings and loan, or credit union, crediting your account with the exact amount of your Social Security or SSI benefit. You can withdraw money, put some in savings, or pay bills. The ordinary things you do with your money. The difference is your check isn't printed or mailed. For more information, visit the Department of the Treasury's Go Direct at website godirect.gov. So, how can you be financially prepared for disasters? We are getting ready to move on to that. Know that natural or man-made disasters can strike without warning and can happen anywhere. These include floods, fires, earthquakes, tornadoes, hurricanes, chemical spills, or similar events that can force people to evacuate their homes. Even minor disasters can damage or destroy property or other belongings. They can also seriously impair your ability to conduct essential financial transactions for a period of time. In addition to planning for your personal safety and basic needs, for example, shelter, food, and water, you should be ready to deal with financial challenges, including how to pay for supplies or temporary housing if necessary. So, what should you have ready? Consider keeping the following documents, bank products, and other items in a secure place and readily available in case of an emergency. Forms of identification. These primarily include driver's license or a state identification card for non-drivers, insurance cards, social security card, passport, and birth certificate. Your checkbook with enough blank checks and deposit slips to last a month, ATM cards, debit cards for use at ATMs and merchants, and credit cards. Do not assume that merchants and ATMs in areas affected by disaster will immediately be functioning as usual. Have other options available for getting cash and making payments. Telephone numbers for your financial services providers. These include local and toll-free numbers for your bank, credit card companies, brokerage firms for stocks, bonds, or mutual fund investments, and insurance companies. Important account numbers. These include bank and brokerage account numbers, credit card numbers, and homeowners or renters insurance policy numbers. You may want to copy the front and back of your credit cards and keep them in a safe place. Also, you may need the key if you have a safe deposit box. So, what to keep and where to keep it? After you've gathered your most important financial items and documents, protect them as well as you can while also ensuring you have access to them in an emergency. Here is a reasonable strategy for many people. Make backup copies of important documents. Make an electronic image of your documents so you can easily store the information. Give a copy of your documents to loved ones or let them know where to find the documents in an emergency. Store your backups at some distance from your home in case the disaster impacts your entire community. Make a record of all credit card or debit cards with account and contact numbers so that you may be able to report the lost or stolen cards. Determine what to keep at home and what to store in a safe deposit box if you have one at the bank. A safe deposit box is best for protecting items of value and certain papers that could be difficult or impossible to replace, but not anything you might need access to quickly. What should you put in a safe deposit box? Examples include a birth certificate and originals of important contracts. What is better left safely at home, preferably in a durable, fireproof safe? Your passport, medical care directives, because you might need them on short notice. Consult your attorney before putting an original in a safe deposit box. Some states do not permit immediate access to a safe deposit box after a person dies, so there may be complications by assessing a will stored in a safe deposit box. Remember that safe deposit boxes are not necessarily fireproof or waterproof. Seal important documents in airtight and waterproof plastic bags or containers to prevent water damage. Prepare one or more emergency evacuation bags. Pack essential financial items and documents, for example, cash, checks, copies of your credit cards and identification cards, a key to your safe deposit box, and contact information for your financial providers. Make sure each evacuation bag is waterproof and easy to carry. Keep it in a secure place in your home. Periodically, be sure to update the contents of the bag. It will not do you any good if the checks in your bag are for a closed account. Arrange for automatic bill payment from your bank account. This service enables you to make scheduled payments for your telephone bill, insurance premiums, and loan payments, for example, and avoids late charges or service interruptions. Sign up for internet banking services. This also makes it possible to conduct your banking business without writing checks. Only do this if you feel comfortable with keeping your internet security software up to date. Review your insurance coverage. Make sure that you have enough insurance, including personal property coverage, as applicable, to cover the cost to replace or repair your home, car, or other valuable property. To learn more about financially preparing for disasters, visit this website, the FDIC website, at fdic.gov/consumer news. Type disaster in the search box to find FDIC consumer news articles by topic that you may need. So at the end of this presentation, we also have another activity for you. It is actually a list to ask you, how financially prepared are you? Reflect on what you've learned today so far and list the documents that you plan together and where you will keep them. Now we are going to turn our attention to scams that target homeowners. Reverse mortgage proceeds fraud scenario. I'm going to read you a scenario. To pay for his recommended improvements, a handyman convinces an older woman to appoint him as her agent under a power of attorney so he can help her get a reverse mortgage on the home she has purchased in the 1950s and owns outright. When the lender provided a lump sum payment, she never saw any of the money because the handyman used it. What is a reverse mortgage? Although reverse mortgages are legitimate products and are appropriate for some consumers, scammers also sell these products to the disadvantage of their victims. A reverse mortgage is a special type of loan that allows homeowners aged 62 and older to borrow against the equity in their homes. It's called a reverse mortgage because you receive money from the lender instead of making payments as you would with a traditional mortgage. The money you receive and the interest charged on the loan increases the balance of your loan each month. Over time, the equity you have in your home decreases as the amount you owe increases. When you take out a reverse mortgage loan, you can receive your money as a line of credit available when you need it in regular monthly installments or upfront as a lump sum. You do not have to pay back the loan as long as you continue to live in the home, maintain your home, and stay current on expenses such as homeowners insurance and property taxes. If you move out or die, or fall behind on property taxes or homeowners insurance, the loan becomes due and must be paid off. For more information, you may visit consumerfinance.gov/F/201409. How do borrowers get scammed? Scammers can sometimes take advantage of the fact that borrowers can receive the loan in the form of a lump sum payout. The reverse mortgage proceeds scam may include one or several of the following elements. Family members or others who pressure the older adult to get a reverse mortgage and then borrow the money or scam the elder out of the proceeds. Scammers who require an older borrower to sign a power of attorney or to sign proceeds over to a loan officer or other agent for future dispersals. The scammers then embezzle a portion or all of the funds. Brokers who pressure or fraudulently require the borrower to purchase annuities, long-term care insurance, high-risk investments, or other financial products with the proceeds from the reverse mortgage in order to generate additional commissions. So, mortgage assistance rescue scam. Beware of anyone who promises you can stay in your home or who asks for a lot of money to help you. Scammers might promise guaranteed or immediate relief from foreclosure, and they might charge you very high fees for little or no services. Mortgage relief companies may not collect any fees until they've provided you with a written offer from a lender or servicer that you decide is acceptable, and a written document from the lender or servicer describing the key changes to the mortgage that would result if you accept the offer. The companies also must remind you of your right to reject the offer without any charge. Don't get scammed. There is help available at little or no cost to you. Foreclosure prevention counseling is available free of charge through HUD's Housing Counseling Program. You may visit the HUD website at go.usa.gov / the letter V as in Victor, number 2, capital H as in hot, or you may call 1-800-569-4287 to find a qualified reverse mortgage counselor to help you. So let's talk about contractor fraud and home improvement scams. Sooner or later, every home needs repairs or improvements. Although some home improvement companies do good work, some may not provide the level of service you expect. Many homeowners are targeted by scam artists who use high-pressure tactics to sell unneeded and overpriced contracts for home improvements. Often, these scam artists charge more than their quoted prices, or their work does not live up to their promises. When the homeowner refuses to pay for shoddy or incomplete work, the contractor or affiliated lender threatens to foreclosure on the home. Con artists may pose as building inspectors and order immediate repairs, which they can do on the side. They may also pose as government officials and demand a fee for processing emergency loan documents. This is a home improvement scam scenario. Monica is 76 years old and lives alone in her home. One morning, she's outside watering her garden when a truck pulls up and a man approaches her. He tells her that he is a building contractor and that he can see that she has a problem with her roof. He points to a spot near the chimney and tells her he can fix the problem now with the materials he has left over from a job he just finished nearby. He says he'll give her a big discount if she'll pay him today in cash. After going up on the roof and tearing off some of the roof tiles, he tells her that the problem is worse than he thought, but he can do it for $2,800. When Monica says she doesn't have $2,800 in cash, the contractor becomes angry and threatening. He says if Monica doesn't have the money, she will have to take out a loan to pay him. Here are some tips for avoiding contractor fraud. Some common sense tips that will help to protect yourself. Ask to see identification for anyone representing him or herself as a government official. Call the government agency to verify the identity if there is any type of payment or money involved. Get bids from several local established contractors. Obtain at least 3 legible bids in writing. Don't sign anything before carefully reading it. Do not do business with anyone who approaches you door to door or on the phone. Note that many states and local jurisdictions have laws regulating door-to-door sales. Avoid contractors who are working door to door. If they come from out of state, or if they do not provide an address and telephone number or refuse to show identification. Before beginning any home repair project, ask if the contractor has the required licenses and is bonded. Seek out references from neighbors or members of your affinity groups, for example, your place of worship or your club associations. Check with your state licensing agency's website or hotline to make sure the licenses are valid. Ask the licensing agencies if the contractor has a history of complaints. Get several references from previous customers if possible and visit them to see if the work is done. Require the contractor to choose to provide you with a contact that contains clearly written payment terms. Don't pay in cash. Never pay in advance. Don't provide personal financial information such as your checking account, credit card, or debit card numbers. If you need to borrow money to pay for repairs, don't let the contractor steer you toward a particular lender. Do not make a final payment until you are satisfied with the job. All debris is removed from your property and any necessary building inspections have been completed. If a contractor shows up at your door and pressures you to go to the bank with him to get cash to pay for a job you don't want done, ask to speak with the branch manager. The manager can call the police for you, who can show up at the branch. Being in a public place with video cameras and witnesses should reduce your risk. To get more information on home improvement, including how to hire contractors, how to understand your payment options, and how to protect against home improvement scams, read the FTC brochure entitled Hiring a Contractor. The website is listed on this page, as well as the number that you may call for additional help. In conclusion today, you've learned about types of financial exploitation, tips for recognizing scams, strategies for avoiding identity theft, including medical identity theft, and how to prepare financially for future health problems and disasters. This is the checklist that you may use for identity theft, and also a blank listing of what you can do to see how well you are prepared financially. Also, this is the website that you may also use to download the Money Smart for Older Adults resource guide. The information that has presented today is available in this guide. It is so much to learn today. We're hoping that you will use this reference and that you are able to download the guide to follow up on the information today. We thank you so much for your time today, and we hope that all the information that we have shared with you has been something that you are able to use. Thank you.